and a very good evening to Dr. Sabrina and my fellow friends. Today, my group will be presenting on the revenue case. So this is the processes involved in the revenue cycle in the revenue case that our group got. Heraclean Corporation sell footballs. Sales are made through a network of sales staff employed by the company and through a third-party company for new customers. The sales staff visit customer sites and orders are completed using a two-part pre-printed order form. The sales order number is based on the salesperson's ID number. Next, the salesperson will email the finance department and warehouse dispatch team with the customer ID and the sales order details to generate a pick list. Then, a sequentially numbered goods dispatch notes are completed and filed in the warehouse. Sequentially numbered invoices are generated using the pick list for quantities and using the customer master data file for prices. The orders are then dispatched out within 3 working days.
Sources of document involved in the revenue cycle. First is packing slip. The function of the packing slip is a document listing the quantity and descriptions of each item included in a shipment. Second is bill of lading. The function of bill of lading is a legal contract that defines responsibility for goods while they are in a transit. Thirdly is a sales invoice. The functions of the sales invoice is a document notifying customer of the amount of a sale and where to send payment. Fourth is the cycle billing. The function of the cycle billing is for producing monthly statement for such set of customer at different times. Lastly is the credit memorandum. The function of the credit memorandum is a document approved by the credit manager authorizing the billing department to credit the customer account. Flowchart for the revenue cycle. First, we will receive the order from the customer. Second, we will processing the order from our customer. Third, we will do billing and invoice preparation. Fourth, we will deliver the goods and services to our customer. Fifth, the product received by the customer. Sixth, we will record the transaction of the order. Lastly, we will receive the payment from our customer. That are the processes or flowcharts for the revenue cycle. Method for documenting the sales system. The first method is the narrative notes. Narrative notes exist in the form of a written system descriptions, specify what happened at every process in the system, and include all the controls that work at each process. The advantages of using the narrative note is they are easy to record, and also these discussions are simply written as notes after discussion with the team members. The disadvantages of using the narrative note is this technique may make it harder to define missing internal control as the details are recorded in the notes but do not correctly identify the control exception. The method for the documenting the sales system for the second point is flowchart. Flowchart represents a graphical illustration of the internal sales system. Lines typically show the change of event, and normal signs are used to indicate control or document. The advantages of using the flowchart is the system can be viewed in its entirety easily, as it is all displayed in one chart. The disadvantages of using the flowchart is sometimes they are just difficult to modify, as any amendment may require a redrawn of the entire flowchart. Sales system of Heraclean Company. The first deficiency of the sales system of Heraclean Company is sales staff can make modifications to the customer master database, allowing special deals to be recorded, and those adjustments are not verified. The recommendations to the deficiency is the access to customer master data file should be restricted only for supervisor and above to make any amendment. The second deficiency for the sales system of hierarchical company is the creditworthiness of new clients is assessed by a salesman who set the available credit, which the marketing manager authorized. The recommendation for the deficiency is new customers should apply and complete credit application and must be checked by a credit agency. The third deficiency of the sales system of hierarchical company is purchase order are provided by identification members of the salesperson himself. They are not sequential numbers. Without sequential numbers, it is difficult for a hierarchical company to define missing order and monitor whether all orders are dispatched in a reasonable time, causing the loss of goodwill for the client. The recommendation for the deficiency is sale order number should be organized accordingly to a logical sequence to avoid missing any orders.
Okay, next. When an invoice is outstanding for 90 days, the sales representative is given the privilege to directly get the payment from customer. This is significantly above the company's 30-day credit terms, which will result in lower cash flow. So, recommendation to address deficiency: appoint a credit controller and take the responsibility to chase any outstanding sale invoices. Next one is the warehouse department shall complete and file sequentially numbered good dispatch notes. If the finance team does not obtain a copy of these GDNs, they would not realize when the related sales invoice should raise. This could cause products to be dispatched but still not invoiced, causing a loss of profits. So recommendation is the company should be at least 4 copy part in the form, where warehouse will get the 3rd copy of the order and finance department get the 4th copy. Next is salesperson emails the finance department and warehouse dispatch team with the customer ID and the sales order details, and from this a pick list is generated. Recommendation is warehouse should have the 3rd copy of sales order and forward directly to avoid any miscommunication. Last one is salespeople have the discretion to offer buyers up to 10% sales discounts. It will lead to the loss of profits, as unreasonable discounts can be awarded easily to achieve sales objective. So recommendation is any discount to be granted to customers should be authorized and advised by a responsible official.
Okay, these are the journal entries involved in the revenue case. First, debit account receivables and credit sales to recognize revenue, and then debit sales discount and credit account receivables to recognize discounts on sale, then debit cash and credit account receivable to recognize collection of credit sales, and then debit bad debt expenses and credit allowance for doubtful account to recognize provision for bad debts. And these are the accounts that are involved in the revenue case. And the accounts, for example, cash, sales, account receivables account, sales discount accounts, sales return and allowance accounts, bad debt expenses account, allowance for doubtful accounts, and account receivable for subsidiary ledger.
Alright, so this is the internal controls involved in revenue cycle. First one is new customers' credit worthiness and proposed credit limit are authorized by sales director. This procedure or control is to make sure that the company doesn't get involved in a business with a person that unable to pay, which will lead to bad debts of company. Second one is a policy for standard credit terms for customers, which is 30 days. Credit terms meaning the customer need to make payment 30 days within 30 days after their purchase. This is also to ensure that the company doesn't involve in any bad debts because the customer cannot pay for the goods. Next one is dispatch notes are properly completed and filed in the warehouse. This control is to make sure that there is no error or to reduce error in dispatching the goods to the customer. Pick list generated after salesperson emails the order details to finance department and warehouse. And the next one is accounting for numerical sequence of sales invoice. This control is to make sure that there will be no duplicate payment, and there is a proper management of sales invoice. Okay, so for the risk area that exists in the revenue cycle is divided into two types of risk, which is control risk and inherent risk. For the control risk, the sales staff have sales targets and hence may suggest that new customers are creditworthy simply to meet their targets. The next one is high transaction performed. For example, credit sales to high risk customers because the sales staff want to achieve their sales target, therefore they don't check the customer creditworthiness and lead to a high risk customer. The third one is not identifying errors and frauds, as the person responsible for the duty are not expert. This is the lack in segregation of duty. For inherent risk, the first one is financial transaction that require complex calculation. For transaction that the calculation is complex, it is difficult for management to make proper judgment and will lead to inherent risk. Next one is complexity to recognize revenue. There is so many ways to recognize revenue. For example, it's either a company recognize the revenue once they receive the order or once they ship the goods. Therefore, the complexity in recognizing revenue also lead to inherent risk. The third one is industry-related factors. For example, government regulation also affect the company's sales of goods.
These are the important assertions for the cycle. First, occurrence. Are all sales transactions are actually occurred according to the sales invoices? Completeness. All sales transaction events that should have been recorded have been recorded. Accuracy. Sales amount are recorded correctly. And cut off. Sales transaction and events have been recorded in the correct accounting period. Classification. Sales transactions and events have been recorded in the proper accounts. Valuation. Sales made are from authorized price list. Okay, so these are the relevant audit procedures for the cycle. First, inquiry. An auditor must ask the employees or the management regarding the sales activity in the company to make sure that the sales occurred and the transactions are correct. And then next, observation. The auditor needs to observe the salesperson recording the sales transaction to make sure that the transactions are recorded properly. And then next is the inspection of records and documents. The auditors may examine the sales invoices and shipping documents to make sure that it is tally with what is presented in financial statement. Next, scanning. The auditor should examine any unusual transaction that affect the business. For example, fraud that the employees make. And lastly is external confirmation. Auditor should get a bank statement for account balances to make sure that the account balances are recorded correctly.
Okay, moving forward to the substantive procedure to obtain sufficient and appropriate audit evidence of revenue. So basically, there are 5 substantive procedures that can be carried out. The first one is calculate the gross profit margin for Heraklion company and compare this to the prior year and investigate any significant fluctuations. The second one is select a sample of sales invoice for customers and agree the sale prices back to the price list. So this is to ensure the accuracy of the revenue. Next one is compare overall level of revenue against prior years and investigate any significant fluctuations. Number 4 is select a sample of dispatch notes, both pre and post year end, and follow this through to sales invoices in the correct accounting period. This is to ensure the completeness of revenue. And the last one is select a sample of customer orders and agree this to the dispatch notes and sale invoices through to inclusion in the sales ledger and revenue general ledger account to ensure completeness of revenue. Right, so that's all from us. Thank you.